In recent weeks, we've highlighted some markets that have held up strong even as supply has ramped up, but there are some that have not been so fortunate, and one of them is Boston. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Beantown update. Like many core markets across the country, Boston has been an attractive hotspot for apartment developers, so much so that it's ignited a little bit of a debate about what really is a barrier to entry market, considering the construction levels now seen in places like San Francisco, Seattle, Boston, Washington, D.C. In Boston, construction has surged up to match the highest levels seen in 20 years, the highest level since 2006 to be exact, with construction topping the 10,000 unit mark of late. You can see a little bit of a drop off in Q4, and that reflects a big wave of product completing in the last 3 months of 2013. Now let's switch gears and look at completions on an annual basis. And what you see is that with that big surge in Q4, Boston ended 2013 with 4,314 units completing the calendar year. Demand fell short of that mark by nearly 2,000 units. That marked the 5th time in 6 quarters that demand fell short of supply in the trailing 12-month period. And that's not a good sign because supply levels only get bigger in the year ahead, much higher in fact. Annual completion levels at points in 2014 will exceed 7,000 units, which would be the highest mark seen in the 2 decades that MPF Research has tracked the Boston market. So more supply than demand means occupancy backtracks, though not too severely, down 60 basis points over the second half of 2013, still a solid rate at 96.3%, and occupancy rates are still healthy across the board among submarkets and product age groups, even in the segments adding lots of supply, and that's a good sign, meaning that as supply ramps up much further, these segments of the market and these submarkets will be moving from a position of strength. The bigger issue, though, has been the pricing side of the ledger. Same-store rents for new leases climbed just 1.4% in 2013. That was Boston's weakest year-over-year increase in 14 quarters, and only the second time over that stretch in which annual rent growth fell short of 3%. And this was a trend seen all across the Northeast region in 2013, with rent growth levels cooling much more than in other parts of the country. Furthermore, what's been concerning is that when we look at the rent growth numbers, the slowdown is not only the top end of the market, which was expected due to the competition from new supply, but we're also seeing a slowdown in middle tier and in bottom tier units. You could see rent growth was basically flat in units built in the 1980s as well as those built prior to 1970, and just around 1.5% or so from units in the 90s and 1970s. And that was a surprise. Our expectation was that the top tier would indeed cool, but the middle and older parts of the market would hold relatively steady. So what's in store for Boston in 2014? Well, the good news for Boston is that job growth really hasn't been a problem, and apartment demand has actually been pretty good, just not enough to keep pace with supply. And that should remain the case in 2014. We expect occupancy to come down about 50 basis points or so in the next year. The bigger question, though, is what happens with rents. And our view is that the slowdown that we saw in the middle and bottom tiers of the market was probably a blip. Occupancy rates are still strong in that segment of the market, plus with the job growth coming in, we think occupancy should remain in good shape and operators should get a little more bullish on rents, and that should help drive overall rent growth in the Boston market back around 2.5% or so. Still below the recent norms that we've seen in the past few years, but above the number that we saw in 2013. And that wraps it up for Boston. So until next time for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.